are the money or the investors still based in Asia? So do you think that there is capital still in Asia that maybe is investing elsewhere, and maybe the builders kind of like stopped? Like you said, there is not much building like it used to be.
Yeah, exactly. Yeah, I mean, Asia doesn't really have a culture of, like extremely cutting edge tech anyway, right? It's somewhat like Europe in that regard. The tech comes out of America and then it gets used in places like Asia and then speculated upon in Asia. In the past 5 years, basically since COVID, and towards the middle of Xi Jinping's reign in China, there's been massive capital flight out of China. So there's a lot of rich Chinese every single day trying to leave China and take their capital out of China, figure out ways to put it. And even Hong Kong is too close for them. If you ask, the average high net worth trying to get their money out, they don't even want their money to be in Hong Kong. They don't feel safe. They try to send it to Singapore, Middle East, anywhere they can that's not anywhere near, the CCP. So that's still an opportunity for crypto to capture some of that.
Welcome back to the Financial Fox show. My name is Steffi. I'm your host. I've been for so many years, and every week I'm bringing to you some of the most interesting conversation and discussions I had with leaders, experts, investors in the crypto space. Today, I will be joined by Akshat Vaidya, co-founder and head of investment at Maelstrom, the family office fund of Arthur Hayes. Arthur, co-founder of BitMEX, well-known investor in the space, and his fund is investing in entropy. So what do they mean with that? Well, Maelstrom invests in early stage projects with a focus on infrastructure and for trusted decentralization, aka new models to monetize the internet using crypto. So I'm definitely discussing investing ideas with Akshat, but also is sharing his views on some of the latest trend. I mean, it's not really latest, it's been going on for quite some time, but we talk a lot about digital asset treasury companies and strategies, and that's what we are going to talk about today. Akshat is just such an interesting personality, and he has got some strong views as well on the current crypto cycle. So lots of alpha that you can take from this interview. I really enjoy my discussion with Akshat, and I hope you do as well. So a couple of things before we get into the interview. First of all, remember that all the content on the show is for informational purposes only and not intended as financial advice. So any opinions expressed by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your own decision. Finally, I'm going to ask you a favor. If you are watching this interview, please take a moment to subscribe to our YouTube channel. And if you're watching on X or Instagram, just follow us. I mean, your support is just so important to grow the channel so we can grow our community and educate more people about crypto. Financial Fox is partnering with High Digital Technologies, and I'm gonna tell you more about them later in the show. Akshat, it's nice to have you on the show. How are you?
I'm good. Thanks for having me on.
Well, thank you for making the time. That I know that you are based, in Asia, and it's quite late your end, but I really wanted to get you on the show and discuss, what you think about the crypto cycle that we are on. You are an investor. You have been also commenting on all these digital assets treasury companies. They are, entering crypto use. But I think it will be great also to get your insights on that, and and then everything else that you want to share from your side. I think it will be very useful for our audience. We have got a mix of, professionals, investors, and many, they are based in the UK, Europe, but also US as well. They are following us, obviously, for the insight that our guest brings to the discussion. So I'm really looking forward to have, a conversation with you.
Thank you. I'm looking forward.
So let's maybe start with kind of a simple question, but I was looking into the fund that you manage, and what kind of caught my eye is invest in entropy. And I was kind of trying to get my head around it. Can you unpack what that means for you? And maybe you can share an example from your portfolio that really embodies the vision.
Yeah. I think when Arthur and I were ideating on what's Maelstrom going to look like, and it's Arthur Hayes' family office, so he wanted it to really embody his perspective and his life philosophy. One of the things he wanted to imbue in our investing strategy was this idea that the world is getting increasingly complex and decentralized over time. And we want to make sure that we've got key assets in each of the building blocks of that new world. So, if you look at, for example, like the internet, when email came about, right? So it's a combination of all these different protocols, applying code bases, et cetera, that basically come together to form a simple application, email. But now imagine if it was, 2025 when email was coming about. And each of those little protocols probably would be a decentralized, profitable protocol that you could invest in. So our view is, we want to participate in every single one of those building blocks of the internet of the future.
Wow, that's very interesting. So where do Bitcoins come in the picture then? Well, I mean, what's your Bitcoin? I'm trying to understand about decentralization, obviously, but I'm trying to go back at the root of you and Arthur thinking about Bitcoin maybe has been the one that kind of spurred this, innovation, or, tell me how you think about Bitcoin and then overall the crypto ecosystem that has flourished from it.
Yeah. So we're fundamentally smart contract guys. Maelstrom, we like to invest in all things Ethereum and Ethereum adjacent apps, middleware, etc. That being said, Arthur is a reformed Bitcoin maxi, right? So on day one, he was like, Bitcoin's the only thing, everything else is a shitcoin. He thought Ethereum was a joke in 2016, 17. Kind of was. It had no use case, right, at that time. I think that's, he's since evolved. You see his posts recently, right now, bullish all things Ethereum at the moment, and the full stack around it. Bitcoin was, the first proof of concept that smart contracts, or rather not smart contracts, that blockchains actually work, right? And Ethereum was kind of the first one to take smart contracts and really commercialize it and take that somewhere, especially with DeFi Summer when we saw some of the first applications of the smart contract ecosystems. But, we still look to Bitcoin as kind of the OG, ultimately overlord of meme coins. And I don't think anyone's going to be able to challenge Bitcoin in that realm for a very long time.
I'm going to go a little bit off script because I think this discussion is starting to get quite interesting. So you think about Bitcoin as well, protector and digital gold, a new version of gold. That's kind of the way that you see these assets.
Yeah, exactly. Bitcoin is digital gold. That's like when people ask me, explain to me, all these different cryptocurrencies, that's the first thing I would say. Bitcoin is basically just a far superior version of gold in almost every aspect.
Now, describe me Ethereum.
Yeah, I describe Ethereum as kind of like it's tokenized trust in a way, right? Because you're basically taking the security mechanism of Ethereum and providing it to various other, end use cases. And smart contracts are just part of the mechanism by which that's achieved.
So do you think that, now obviously with regulation being more pro-crypto and with all the step forward that we have made, especially in DeFi, right, from the regulatory perspective, and we should see some kind of development and evolution in finance. Do you think that Ethereum is the base where the institutions and the current player are going to be building? Is that really the base for the future of DeFi, or actually for DeFi? Let's stop talking about the future. We are in.
Yeah, right. Or we're in the future in a way, right? It's kind of crazy. Yeah, I think that ultimately the high throughput competitors to Ethereum and the Ethereum L2s will probably be where most of DeFi happens. I don't think majority of DeFi will happen on Ethereum L1 going forward. But I think that DePIN, for example, which will someday be larger, DePIN will someday be larger than all of DeFi is today. I think that will happen on Ethereum, most likely. It doesn't have the same high throughput needs that DeFi will require in the coming years. So I think you've got you got your Solanas, you got your other competitors that are coming into the space in the high throughput world, plus the L2s. That's where all DeFi will sit, I believe, in the coming years.
And when we look at other layer one, what do you think about them? I mean, do you have a list of the one you think they've got a use case and they are going to be thriving? and maybe the ones that you think, they had their time and now maybe it's not they are going to die, but, slowly going to be less relevant?
Yeah. So as far as the high throughput L1s, Solana is obviously leader of the pack. I think ecosystem network effects are very, very difficult to combat in decentralized protocols. So, even though Ethereum kind of sucks for DeFi, at least the L1, it's costly, it's kind of slow, it's clunky. The apps on Ethereum aren't really that useful. It still has a really, high market share, obviously, of DeFi and use cases. Solana, the ecosystem of apps are far superior. They're slicker, they're easy to use, with some issues here and there. They've managed to chip away in the last many years at Ethereum's dominance, but not as much as you would have expected based on the fact that it's just much easier to use. I think new entrants to the space, the bar gets higher and higher, and it's not enough to just be faster, higher throughput, etc. Now, non-technical moats are probably more important. That means the network effects. That means, you're able to convince apps that are used to actually build on your platform. And it can't just be copy paste shit. It can't just be like, okay, we took the same perp stacks from that we saw in Solana. We just put it on Monad, whatever, put on the new thing. That's not going to be enough. There needs to be some net new applications that actually bring net new users and net new flows onto that L1's ecosystem.
We are partnering with Hive Digital Technologies for the Financial Fox. They are one of the fastest growing publicly listed Bitcoin miners. By the end of the year, they are going to capture 3% of the global Bitcoin network. This year has always been focused about efficiency, and they've made some really great progress. They were one of the first Bitcoin treasury companies and the first crypto miner to implement an AI strategy. They have data center in Canada, Sweden, and Paraguay, which is now their big focus. Their operations are powered entirely by green energy, and their priority is to build and scale a lean and shareholder-focused company that also transforms the community where they operate. Go and check them out at hivedigitaltechnologies.com. Yeah, that's interesting. One of the things while you were talking just came to my mind is about privacy, which is something that has always been like a topic of discussion because you don't want to have all transaction public, you need some kind of level of privacy for the different players. Is there something that you are currently investing? You think there are other maybe pieces of infrastructure that are important for newcomers into the DeFi space?
I think at this point, privacy is not a huge focus of our investment stack currently. I don't think we're at that stage in the maturity of our industry to where that's a concern at this stage. It seems premature.
All right, interesting. Okay, so let's maybe look at the infrastructure pieces that you are investing on and you think they are very important right now. So where we are, what is missing, what you think is going to be very important from now on to make sure that this positive regulation can actually be transformed into some kind of execution and industry evolution as well?
Yeah, so right now I'm of the view that what we really need is just usable apps. That's really it. And we need regulated wrappers for large pools of capital to be able to enter into our industry without having to deal with the clusterfuck that is our usability. Right? It's so easy to get burned. It's so easy to lose funds. There's impermanence loss. There's just so many different things that people can do to accidentally lose money in the space. I think that it just needs to be more usable. And with that will come larger flows. With that will come, higher quality investors, higher quality founders, higher quality teams, and the whole thing, the flywheel will continue. But it just needs to be more usable. So I don't think we need to go that deep in the infrastructure stack yet.
So compliance and user experience.
Those are two big areas, yes. And I think that, we kind of, in the pre-call, we were just like chatting about some of these DATs, right? Some aspects of those kind of components of what I'm describing there with the regulatory kind of like glove to be able to access our industry in a safe way.
Yeah, it's very interesting because I was looking at the companies, the public listed company getting into Bitcoin and building this treasury early this year. It was kind of like very early, that was only kind of a trend in the US. And then, eventually even it got here in the UK. And then I was reading, your comments on the industry, and it's the first time they actually saw the acronym that was said. Because you could mean even decentralized, autonomous. I don't know. And then, okay, it's actually digital asset treasury. So tell me what you think about where we are right now, because it all started as a great idea with a strategy building, day treasury. We live in a time where we need an edge. Companies need to build value for shareholder in the long term. Bitcoin is great, edge against inflation, blah, blah. And then it got into more like, okay, let's jump on the bandwagon. We can raise capital. We are going to trade at a premium. We can get the market cap up. But then there is not really sustainability. And that's really what I'm really worried, seeing so many public listed companies just trying to raise money really, and then don't even know even if they can sustain that. And even the things that worries me more is they don't have any skills. They don't, they are new to crypto and Bitcoin. And it's like, anyway, tell me the way you see things.
Yeah, we've been looking at some of these public equities that touch crypto for a while, right? So obviously Tesla was one of the first ones to go big with an announcement back in maybe January or February 2020, I think it was. That kind of, brought a lot of interest into the intersection of TradFi and crypto. You mentioned MSTR, obviously been pioneers in the space. You've got miners that have been around for a long time. I've got a bag of public listed miners that have been holding for a really long time. And then now you've got this new phenomenon of just like number of these DATs, right? Digital Asset Treasuries that are trying to replicate MSTR in various different ways with a million different tokens. And there's just been like, I've seen probably 5 to 10 a week of these decks. There's so many. Some of them are pretty interesting. Some of them are nonsense. Some of them are just absolutely batshit crazy, like NFT backed stats and shit like that. Just there's some crazy stuff happening. But I think on the balance, it's a net good thing. But it's likely that something will break because there isn't a lot of quality control at the moment. And the guys who are in charge of basically putting these to market, which are the investment bankers, they don't really care about quality at the moment. They're just kind of churning them out. You see the same 5 to 7 investment bankers behind every single deal. They get paid in their fees. They get paid in fees upfront in cash, right? They don't really care. They're just like, oh, you want to do another DAT? Okay, sure. Whatever we'll charge our, 5-7%, get our cash upfront, and then we'll do like 10 more. And so they're incentivized to keep going. As long as the market's going up, okay, quality doesn't matter. But once we enter one of those like redemption cycles where the underlying is going down, everybody's trying to redeem, everyone's selling at the same time, it's just this like horrible flywheel of negative feedback loops that will probably destroy the market when it happens. But out of that wreckage of that, there'll be a flight to quality, and I think some will probably, as a fund, double down in the winners at that time when that happens.
When you are looking at, you mentioned that you are seeing lots of decks. What is the investment case that make most sense to you as an investor when it comes to a digital asset treasury company?
So it's a little bit of Wall Street wizardry, right? Realistically, it doesn't make a lot of sense why I can go buy $1 of Ethereum and then sell it for $3. It doesn't make any sense. So it's a little bit of standard kind of Wall Street stuff where there is a premium because there's a premium. The market has just said there's a premium, therefore there's a premium. It's not actually rooted in any underlying reason other than, there's 2 good reasons, right? One, it's just easier for a far larger percentage of global capital and a percentage of investors globally to participate in these than going on chain directly. So it's easier, sure. And then it also integrates with the rest of their portfolios. So they're able to margin across the entire thing. They're able to take debt across the entire portfolio. They're able to get these past their ICs, or just there's other benefits to having the underlying asset packaged in a regulated way that they can touch. So I understand why there's some premium. Now, should the premium be 1.5 to 3x? Probably not, especially not for the lower quality ones.
Do you need to have a business that actually is making money in order to put a Bitcoin treasury strategy in action? I mean, is that really needed in your view, or do you value that as an element of a company when it comes to you for money?
Well, I think that speaks to the evolution of DATs, how they will evolve over time. Right now, it's actually better that they don't have an operating business because that's a distraction, right? Because we're investing The investment story is $1 of Bitcoin is worth $3 in public markets. Now, if you're randomly running like a Midwest trucking business in the middle of that, that's actually operational noise. It's a distraction. It's a waste of time. I prefer you don't make any money. You don't have an underlying business, and it's just a wrapper. And the CEO is just focused on that.
Right. And how do you see about using these assets, whatever is Bitcoin, Ethereum, or whatever is in the treasury, and leverage them up to earn yields? Is there a strategy that you value?
Yeah, I mean, at that point, you're basically backing a hedge fund that's kind of masquerading as a public company, right?
Yeah.
At that point, you're saying, okay, we're going to back them in their staking strategy, their, whatever leverage bets they're playing. That's something I do value. But what I value a lot more is strategic synergies with the underlying. So for example, what that means, we recently backed a stablecoin X, which is Athena's DAT. And, in that case, there are strategic synergies between the Athena Foundation and the DAT, whereby 1 + 1 = 3, right? Because they're able to actually, there's a flywheel there. And I think that's an example of the kind of DAT that will start off as, okay, this is just a way for TradFi to access ENA. It starts off that way. I think eventually they'll be able to evolve into, now this is TradFi's way of basically participating in the protocol itself, right? Being users, adding to TVL, right? That's evolution number 2. And eventually, set aside the Athena DAT, over time, these DATs might become holding companies for holdings in various protocols. They might have revenue share agreements with profitable protocols. They might even evolve into holdcos like Metaplanet and actually acquire companies. They'll have to start differentiating themselves over time, which is why I'm okay with DATs existing the way that they are now, because I know they'll evolve in the next 5-10 years.
Interesting. So do you see DATs mainly be kind of financial service companies, or that kind of ecosystem, they kind of increase whatever is the synergies of the underlying assets? Or do you also value some kind of like maybe building on the top of the assets, building product?
Yeah, I don't think I would value, like you're saying, for example, if they're building like Bitcoin levered vaults or things like that, right? Yeah, I don't think I want them to build financial products through these things. I would rather they just directly participate in the underlying protocols and act as like a pass-through.
Yeah, okay. Okay, very interesting. So we have seen, obviously, everybody started with Bitcoin, and now, there are many companies, they are adding Ethereum and stablecoin. Which are, the assets that you think are more, or you are most interested in? Is that mainly Ethereum digital, treasury strategy, or, you see some others that you think are part of the example that you mentioned? Is there anything else that you want to share?
Yeah, I mean, I'm most excited about DATs evolving into ways to actually access the protocol itself and be a safe wrapper for TradFi to become basically TradFi TVL in the protocol itself. Because I want TradFi to be able to benefit from the products, the underlying products, and not just the token pumping. Yeah. I want the token pumping to come secondarily. I want first TradFi to realize, there's just a great product here. I just want to use it, like access it through the DAT, and then later realize, there's also another way I can profit from this, which is participating in the token itself.
So it could be any kind of protocol. It could be Cardano, for example, or, obviously, your face is got me like, what are you talking about?
It could be our Cardano if you want. It wouldn't be my choice, but...
Yeah. Okay, so we understand Ethereum.
Or like Aave, right? Or like Pendle, ETHFi. Like these are the ones that I would be, they've attracted a lot of TVL for a reason. And I think that's where TradFi should probably be guided towards over time as well.
Right. What's your thought on Sui, for example?
I'm not super bullish on most of the other competing L1s other than the couple of big ones. I think it's really tough for new entrants.
Okay. Now, I want to ask you something about the market cycle we are in. Because, if I'm not wrong, how long you have been in crypto? Since 2013, isn't it? Did I...
So, as a retail investor, yeah, I've been buying since 13.
Okay, right. So quite sometimes, you have seen different kind of bear and bull market. I got in a bit, 2016, but, still quite early. So where do you think we are now in the cycle? Because I've got my own view, and I think we are kind of like getting near to the top. Do you think are we going to see a correction soon? Or how end of 2025 and 2026 is going to look like?
Yeah, it's really tough, right? Because every time it feels like we're in uncharted territory. So in 2013, 14, right, it was just, a bunch of people in their basements doing this for fun on the side. And that cycle broke when I forgot the name of the exchange now. The Mt. Gox was hacked, right?
It's
The cycle ended then. And I remember I bought a bunch of Bitcoin at the peak. It was like $1,200 or something. I was like, fuck,
yeah.
I got rugged, right? It went down to like $300 for like 2-3 years after that. And then, the cycle that you entered into, 16, 17, 18, that was like the white paper scam time, right? There's so many great white papers. ICOs.
ICO, pay you in a token that never list. At least in 2021, there were DEX. That was
Right.
nothing. Anyway.
At least there's something, right? Yeah. Like I invested in a bunch of things in 2017 that just, I have no idea what happened to the money, the founders, everyone disappeared. It's just how it was back then. But even then, it felt like, okay, it's bigger because now there's smart contracts and for the first time, there was Wall Street guys quitting their jobs to enter crypto. That's when I started. I quit my job in private equity in 2019 to join the crypto industry full-time professionally, to join BitMEX in Hong Kong. And, that time, same thing. It felt like, there's unprecedented traction. Then DeFi summer happened, right? And then after COVID, when Trump helicoptered cash to everybody and they all started pumping it into stuff, and a lot of it went on chain. Each time, it's always felt like it's uncharted territory. It feels the same way this time, but also it's like, it's truly, we've definitely Trojan horsed our way into something that is very hard to reverse, right? In the halls of Wall Street, we've got the Genius Bill that's now become the Genius Act. We've got the SEC, CFTC, everybody moving in our favor. We've got the largest institutions in the world touching crypto, building on crypto. Stripe is building an L1. Circle is building an L1. The world has transformed. So I think, yes, we're definitely entering that kind of like hypey territory where everyone's like, Ethereum's going to $20,000. Like, all right, maybe. Like eventually, yes. The answer is yes, that will happen. But when everybody starts to say, once there's kind of like this consensus bullish view, that's usually a bad sign, right? That's usually kind of a sign that our eye is no longer on risk. Something's probably going to break. It happens every single time. I don't think this time's going to be any different. But I do think that the floor is a little bit different now. And I think we've got stronger hands. Retail hasn't really been aping in as much as the past. I don't hear Uber drivers hitting me up, and I don't have like long lost cousins saying, hey, what token should I buy? Like, that's not happening like it did the last couple cycles. Once it gets to that phase, maybe it'll start to feel that way. But I think right now it's still kind of like none of the extreme red flags for me are, whether technically or anecdotally, are really being, are really seeming like that much of a concern to me at this stage. But we'll see.
It might be, friends asking which is the digital asset treasury company I should buy. Maybe that is
Right.
the question. But so what do you think will be the catalyst of a correction? Because there is always something happening that, FTX, I mean, just to mention something that could actually, what that would be. I'm kind of like struggling to identify. Would that be maybe a DAT kind of struggling or?
Yeah, I mean, that's my latest hypothesis is that, some of these DATs are, I think, it's all fine when the number's going up. They're mechanically built to succeed as the number goes up. But when the number starts going down, right, it doesn't quite work the same way, especially if it's sustained. And at some point you got, there might be activist shareholders who say, it's time to start redeeming, like give us the tokens. We don't want to have the shares, right? A lot of things could change. It could become a shit show really fast. And, it's almost like it'll just be like a cascade of deleveraging across the board. And, you imagine a scenario where, okay, Ethereum starts crashing consistently. And now every single one of these DATs is basically panicking. They're not able to raise. They're getting margin called. Right. And now they have to sell the underlying. Now the underlying is worth less. So now their valuation is less, and it's just kind of like, it's just this never ending cycle. It could be really bad. This like Wall Street wizardry of like sell $1 for $3. It works when the number's going up, but people forget that it goes the other way around as well. That when things start going down, that $3 turns them back into $1, and it's not going to be pretty. I'm of the view that this is going to break.
So right now, what are you doing? Are you, as an investor, are you watching? Are you still focused on that? Are you looking at something else? What are you doing now?
So we started off as a venture fund only back in 2023 when we launched Maelstrom. And the first year or two, we were focused on that. Then we added a liquid arm about a year ago to take advantage of kind of market neutral sort of opportunities and arbitrage opportunities. And then this year, we've kind of slowed down on the venture bet stuff. Valuations gotten a little silly. Haven't seen great new ideas in a while. We've been focusing a bit more on late stage type investing. And what that includes is one of the most exciting areas for us, which is LBOs and buyouts. So we've recently onboarded a former executive from a spin-out fund of Vista Equity Partners in Austin, Texas, to help us. And we're hunting to acquire companies and kind of, take the private equity playbook that we've seen in many other industries and bring it to crypto. Be the first ones to, successfully pull off like a roll-up, for example, or a leverage buyout of, a large profitable company that we think we could manage better and sell or IPO in 5 years. That's super exciting for us.
Okay, so would be this company something like nothing to do with crypto, but you think that integrating crypto, they could be value much more, and that's kind of like the thinking behind the buyout, or what's like the
No. So for us, the vision is there are a lot of companies in crypto that don't have tokens yet, and they probably should never have tokens, or maybe they should. But they don't have them yet, and they're like fully equitized businesses. They're cash flowing. They're making a lot of money. But it was the same founding team that took them from startup to year 2, 3, 4, and they're in need of new management to be able to take it from year 2, 3, 4 to year 10, right? And usually when we look at businesses like these, they're super profitable. They're doing quite well. They've grown a lot, but they're starting to stagnate a bit because they just don't have the management chops to be able to take it to the next level. And so we've approached a couple companies. We got really close to acquiring 2 like very well-known brand name companies in the past 6 months in this space. The whole philosophy is these are crypto companies. They are built in our industry for our industry. They are generating revenues directly from crypto. We have no, we don't want to like buy some random company and then like turn it into a deep end project. We want to like take a lower risk plan than that and run these better, grow them, and then sell them.
Question, because you talk about business, they are kind of stagnant. Maybe it's not the right words for what I'm going to ask, but Bitcoin miners, they had some great times in the past, years, and now, so I'm not saying they are stagnant because that's not all of them, but the industry hasn't been benefit from the bull cycle like the DATs, right? They have been they've been doing okay, but they haven't been, the share price has gone up enough to see, there was a Bitcoin miners boom. There hasn't been. And, they've added, obviously they try to evolve, adding HPC business, which looks great in the future, but maybe not, not in the present. And they need to, to sign agreement and stuff like that. Do miners come in your picture somehow? And how do you think about the industry?
Not really. So for us, we're focused on higher margin businesses in that. I think mining is a great industry for certain types of investors who are, really familiar with and comfortable with commodity businesses where there's like volume. It's all about volume and like razor thin margins and operational efficiencies and things like that. For us, we're focused on essentially software businesses that have more of like a subscription SaaS kind of model.
Yeah.
Or should have one and doesn't have one right now.
Gotcha. What's the thought on miners?
Miners, I think, they can be profitable when run extremely efficiently, which is why a lot of those miners in China back in the day when they were being run out of China were super successful. That's just kind of the business culture there. But I think that for us, it's not an area where we add any edge, and we're not able to run those things more operationally efficiently than anybody else can who has a background in businesses that look more like that. So it's not really a category for us.
Right. So you're not really looking into Bitcoin mining. And are you keeping the holdings that you have?
I am. Yeah.
Yeah. Okay.
Yeah.
It's a very interesting industry. And then when you mention about, kind of like fighting for the best efficiency, that's true. And I mean, Hive is definitely one company that has been very efficient or is trying to increase their efficiency. But it's not easy game, right? And I think, even integrating AI and then going to an investor, you have got an investment case that has got 2 strategy, has got 2 businesses, you really need to how can I say, yeah, put that together in a way that makes sense for investor. And sometimes it's not a easy playbook. That's why, some of them, they're not really doing great. I mean, they're doing okay. It's the bull market. Everybody is, but,
Right.
don't know what's happened when, the song stops.
Right.
But
Right. Yeah. The musical chairs. Yeah. It's always game musical chairs in a transition
is that,
from a bull to a bear.
well, let's hope not too soon. We definitely need more adoption. So anything else that you want to share? I think I kind of asked you all the question that I wanted to, but
No, yeah, nothing I want to add to that. I mean, I think happy to answer any questions you have about, the cycle, Asia, whatever it is, but yeah, nothing I want to add.
what's in Asia, by the way? All the focus has been the US and then Europe and the UK. They are lurking. They are more, kind of like put their head in.
Yeah.
What's up in Asia? And what's happening also in the UAE as well? Because that was very popular, right? Now, the media, they are talking less about that part of the world.
Yeah, it seems like it's been an interesting awakening for the US markets, with the new administration obviously has ushered in so much positive sentiment and brought innovators back to New York. I don't know if you've been to New York in the past 9 months. It's like electric now, right? There's so much innovation. You can feel the culture of the information flows are definitely on the ground there. I'm excited to potentially spend more time there over the coming years as well. But in Asia, it's just taking a little bit of a backseat. Asia used to be, it was a really interesting market. Obviously, Asia's a massive continent. Hong Kong was home to all of the major exchanges back in the day. Either had the largest office or was the headquarters of basically OKX, Binance, Bybit, BitMEX, FTX, like every single exchange, pretty much. It was either headquartered in Hong Kong or shadow headquartered in Hong Kong or had the largest office in Hong Kong for years. And it was a trading hub. And there's a lot of market makers here, etc. A lot of that's changed. South Korea was one of the largest markets, obviously, for retail adoption, basically punters. Japan kind of disappeared after Mt. Gox. They might be coming back online in a more like enterprise blockchain kind of manner. We'll see. And Southeast Asia is more like remittances and things like that. Not a huge market, but Vietnam has been a big trading market. And Singapore took a back seat again after FTX. Quite a shame, right? Temasek backed basically the worst player that they could and got burned. So I think Singapore hasn't really been a hub for innovation in a long time. But Singapore kind of plays the role that Miami plays in America for crypto, where there's a lot of key decision makers who made a lot of money and are kind of retired there. But still, there's like lunches and dinners and they play golf and it's a good place to hobnob amongst that community. But there's not a lot of builders anymore in Asia. And most of that's happening in the US.
Interesting. So are the money or the investors still based in Asia? So do you think that there is capital still in Asia that maybe is investing elsewhere? And maybe the builders kind of like stopped or, they, like you said, there is not much building like it used to be.
Yeah, exactly. I mean, Asia doesn't really have a culture of, like extremely cutting edge tech anyway, right? It's somewhat like Europe in that regard. The tech comes out of America and then it gets used in places like Asia and then speculated upon in Asia. The underlying technology, typically comes from the US. That's true in any industry and especially in crypto. And I think there is still a lot of capital here. There's a lot of, in the past 5 years, basically since COVID, and towards the middle of Xi Jinping's reign in China, there's been massive capital flight out of China. So there's a lot of rich Chinese every single day trying to leave China and take their capital out of China, figure out ways to put it. And even Hong Kong is too close for them. If you ask the average Chinese high net worth trying to get their money out, they don't even want their money to be in Hong Kong because they don't feel safe. They try to send it to Singapore, Middle East, anywhere they can that's not anywhere near, the CCP. So that's still an opportunity for crypto to capture some of that. But I think, nothing's changed in terms of Korea still remaining to be the king of speculative energy in our industry. Still 30% of all revenues across all sexes probably comes from the greater Seoul area alone, which is crazy.
It's interesting because when there was a kind of the meme coin mania, there were a lot of stuff was happening actually in Asia, that kind of speculation. And also there was also the gaming, when we were talking all about crypto gaming and stuff like that. I thought that there was a lot coming out from Asia, also in the terms of building, right?
Yeah, the game Axie Infinity, right? And some of those, like, I forgot, they had some term back then. It was play to earn, right? Those little Ponzi's that never took off. Yeah, that is Asian culture, right? It's ultimately Asians when it comes to finance. They love to gamble, and that's fundamentally what those were. That's why GameFi took off in Asia, right? That's why South Korea is just like a punting ecosystem. They're not actually using the underlying DeFi protocols. They're just gambling on the token itself, which is so fascinating. And I think that is it speaks volumes about the investing culture here.
Yeah, 100%. I'm going to ask you just the last question. It's something that, I've been asking a few people, and because I will be curious to know what's your answer. So quantum, do you see quantum being a threat to Bitcoin anytime soon, or is we are like 5-10 years away, or even, it's not something that we should be worrying about?
Yeah, to be honest, so we have a head of research, right, who goes deep into that kind of stuff. If he's not concerned about it, then I'm not concerned about it, which is probably one of our industry's blind spots, right? That's kind of all the investors and the retail folks are basically saying the same thing, that look, if our most technical people in our space are not extremely concerned, then we probably shouldn't be, but that could easily be a blind spot.
Yeah, okay. Yeah, that's the same that many people said to me, it's something that too far away and we shouldn't be worried. But, there's been proposals that has been made, I guess, because they identified that could have been a risk, but maybe it's not an imminent one. So, okay, great. Akshat, thank you so much for coming on the show. That was such a great conversation.
Thank you. Thanks for having me. It was a really good chat.